All right, so you are all welcome back to the fourth day of our 30 days bootcamp training about Forex. And this is the fourth day, and it's going to be amazing. We are going to learn something very important aspect of trading. Okay, support and resistance. That is the topic for tonight's presentation. And support and resistance are very important aspects of trading, like I said, and you cannot ignore support and resistance when it comes to trading. Definitely you would have to use this technical analysis. Okay, what we are doing is called technical analysis, how to analyze the market. It's a professional way of analyzing the market, and that tells you that you really know what you are doing in the market. You don't have to just go in the market to play games or to gamble. Is the price going up? Is the price coming down? No. So technical analysis would help you know what you are doing, help you analyze the market very well. And then support and resistance is one aspect of technical analysis that you can't ignore. Okay, so we are going to go right into the meaning of support and resistance, or what does support mean, what does resistance mean on the market, and how to trade this support and resistance. Okay, so first of all, let's look at the meaning of support and resistance. Okay, so the concept of trading level, okay, support and resistance are undoubtedly two of the most highly discussed attributes of technical analysis. That is the two of the most highly discussed attributes of technical analysis, meaning that you cannot talk about technical analysis without talking about support and resistance. Okay, so part of analyzing charts, whoever joined, you are welcome. Part of analyzing chart patterns, these terms are used by traders to refer to price levels on charts that tend to act as barriers. Price levels on charts, we shall go onto the charts at intermittently to demonstrate whatever we are learning. Okay, so it's saying that this term is used by traders to refer to price levels on charts that tend to act as barriers. When we say barrier, we mean where at a point where you cannot penetrate. It's a barrier. Okay, yeah, so they act as barriers, preventing the price of an asset from getting pushed in a certain direction. Okay, so this support and resistance, we are saying that they act as barriers, preventing the price of an asset or of a currency, okay, in getting pushed in a certain direction. So for example, you open the chart and then you realize that price is moving up. Okay, let me go to the chart right away and then show you some of these things we are talking about. At every point in time, I will switch to show you whatever that we are talking about. So what I'm opening currently is the price chart for GBP JPY. That is Great British Pound and Japanese Yen. Great British Pound and Japanese Yen. We are saying that these support and resistance are certain areas on the chart, okay, where they act as barriers to prevent the price of an asset from pushing into a particular direction. Okay, so for example, I'm going to divide this chart into sections. Okay, and I'm going to ask you a few questions to see if you remember what we learned in the past. So I'm trying to divide this chart into sections. Then from there, I would ask you a few questions. All right, so I'm drawing some lines on the chart. Okay, so let me draw another one here. No. Kindly give me just a second. I'm drawing some lines. Okay. All right. I know some of you know what I'm doing, others too, you are new to it. You'll get to understand when we start talking about it. Okay, so we learned in some of our previous meetings that that's the market structure. I remember when we were learning the market structure, okay, we learned that the market move in two directions. We have three. We said three. That is an uptrend, a downtrend, and then a ranging market. Okay, so I want you to I'll call out a few people to answer this question. I want you to demonstrate to me that you really understood that lesson. Okay, so look at where I'm going to start from. Okay, starting from this point, let me draw something to show you. Starting from this point, okay, where I've drawn this, let me extend it a little. This point, okay, to this point. From this point to this point, okay, so look on the chart carefully. From this point to this point, let's note, is it an uptrend, a downtrend, or a ranging market? Okay, so I'm going to call out name from the list, and then you tell me from this point on the chart to this point, is it an uptrend or a downtrend? Is the market moving in an uptrend direction, a downtrend, or it's ranging? Anyone can answer. Let's be quick. Anyone can answer. We have a lot of things to do, so let's be quick. Is it an uptrend, a downtrend, or a ranging market from this point up to this point?
Uptrend.
I mean, from this point to this point, is the market moving in an uptrend, a downtrend, or it is ranging?
It is moving in an uptrend market.
In an uptrend.
Uptrend market.
Very good. So you could see that price move from this level down here. Price move from this level up to this level. Okay, so at this particular point in time, the market is in an uptrend. And what did I say about uptrend market? How do you trade an uptrend market? You buy or you sell?
Uptrend, you buy. You look for buying opportunity.
Very good. So in an uptrend market, you look out for a buying opportunities. And we also talked about the fact that I can zoom out this chart for you to see it clearly. Okay, when I zoom out this chart, this is how you are going to see it. Okay, when I zoom out, this is how you are going to see it. You could see that the market is now opening up. Okay, so this is how it looks, but this is the compressed form. Okay, this is the compressed form. What you were seeing was a compressed form. So I said in an uptrend market, you look out for buying opportunities. And how do we identify that the market is in an uptrend? We said that in order for you to be able to identify that the market is in an uptrend, you see that the market is making a series of higher highs and higher lows. Okay, so starting from down here, let's move down. You could see that the market moved from this point, okay, where you see the circle. The market or the price moved from this point up to this point. So this is a higher high. Then the market, there was a pullback here. Okay, and this is a higher low. This low you are seeing is higher, a little higher than this. Okay, so the market went up again, and then retrace. There's an impulsive move, a retracement, or a pullback. Impulsive move, pullback. It will continue in that direction. Impulsive move here, then there was a pullback here. Impulsive move, pullback. So the market will be making a series of impulsive move up, and then a retracement. As it goes up, it comes down, it goes up, it comes down, and you could see that the price will be what, moving higher, higher and higher and higher. And when you see such a market, it means that it's an advantage for you to buy at a lower price and then you sell when the price what goes high. Okay, so that is it for the uptrend market. Now let's look at another structure here. Which type of market is this? Where you could see that I have drawn some lines here, up and then down. Which type of market is this? Which type of market is this?
It is a ranging market.
Very good. This is a typical ranging market. You could see that the price of this market has been trapped up, or has been trapped in this two lines I have drawn up here, up and then down. Okay, so you could see that the market what comes back, it hits the line and then it goes up, it comes here, down, up. When the markets or price start moving in a particular range, means that the market is what, ranging. Therefore, you only look to buy out from the support and then the resistance levels, of which we are discussing. Okay, so this is a typical example of a ranging market. Then let me see if we can identify this one as well. Now what you are seeing is the daily chart. Okay, what you are seeing is the daily chart. I think I need to. Okay, so let's look at this one as well. From here, the market moving from here, moving from this section, okay, moving from this section up to this section. Okay, so the market moving from this level, okay, down up to this level. Which type of market is this? The market moving from here. You can see that the market has moved from here down to this section. What type of market is this?
This is the downtrend market.
Very good. It means that the market is in a downtrend. And what did we say about downtrend market? How do you treat a downtrend market?
It has a selling opportunity.
Yes, you only look out to sell as the price move up, and then as it moves up, you sell. It comes down, you get out of the market. Okay, so you look out for buying opportunities. That is what we said about a downtrend market. So now that we have been able to identify each of the markets, the type of market, we are going to look out for the areas where price tends to act as what, barriers, where the price gets to and then what, it reverses. That will serve as our support and resistance, just like we were talking about. Okay, so we want to look at certain key points. We'll go on the chart, we'll go back to the chart and draw our support and resistance as we ought to do. But for now, let's look out for these key points. Okay, the first one is that technical analysts use support and resistance level to identify price points on a chart where the probabilities favor a pause or a reversal of a prevailing trend. Okay, so where the probabilities favor a pause or a reversal of a prevailing trend. So let's go to the chart once again. Now you could see that let me delete this from there. You could see that here the market was moving up. Okay, the market was moving up. So as it came to reach this point, you could see that the market was now dropping. It started dropping down. So this point you are seeing is acting as a resistance. It resisted the price from going up. So what you do is that you place a line above that point. Okay, you place a line above that point. So the line you are seeing here is called a resistance line. That is the point where price touched and it reversed. You could see that when price came here, it reversed all the way down. up to this point. Okay, and then when it reversed to this point, you could see that at this point price what started moving up again. So this point now has turned, this point also is now acting as a support, okay. This point is now acting as a support. That is the point where price came down and then reversed in a certain direction again. Okay, so now you could see that we have what, a resistance up here and then a support up here. And always when price get to this level, they respect that level and then move back. They either pause or move back. Okay, so you could see that when market what started dropping from this point up to this down here, let me use an arrow so you could see well. You could see that when market started moving from up here, getting down up to this level, it came to reach the support and then it bounced off from the support. Okay, as it got to the support, it started to bounce off and then going up, and then it came down again, down, then it came back to the support. Because this area is a strong support, you could see the market bounced off again and then came back to test the support again, and then bounced back, came back to test, and then it started moving up. This time around it moved up and up. So what it means is that all the time when price gets to this support and this resistance areas, they tend to respect these areas and then they bounce back, or they pause or react to these areas on the chart. Okay, so I'm going to show you, if we are to trace the market back in history. Okay, let's look at the history of the market. You could see that whenever price tends to get closer to the resistance, it drops. Okay, you get close to the resistance, it drops. Now we can draw a lot of support and resistances. Okay, so here, let me open the chart wall. Let me open the chart wall so we can see. So I was using the condensed form. This is the open form. Now you could see that there are certain areas price gets to and then they reverse. So what you do is that this is how to draw support and resistance. So you draw a line at the point where price got to and then it reversed. So you can see that you can put a line here which is serving as a resistance. That is the area price got to and then it reversed downwards. So this point is serving as a resistance. Then you could see that we would have other supports here. Okay, at a point where price got to and then it reversed up. Okay, so you can see that this market came down, it touched the support and then moved up closer. It didn't get close to the resistance, then it came back to the support again, then it reversed up, came back, went up, came back, went up, came back, went up. So you can see that this area is a strong support. The down here is a strong support. Whenever price tends to reach this point, it reversed backwards. So we say that this area is a support zone. And then as it goes up, you can see that there are certain areas price get to, then it reverses downwards. Okay, and that area is the resistance. So let's kindly take note. Okay, so that is it on I'm drawing this support and resistance on a daily time frame. Okay, on a daily time frame. The time frame I have selected here is a daily time frame, meaning that each candlestick you see here is representing a day. Okay, so these are so many days. I can switch to the 4 hours, 2 hours, 1 hour, 30 minutes, depending on which time frame I want to analyze and trade the market. But kindly take note of this. Whenever you are drawing your support and resistance lines, always use the daily time frame or the 4 hours time frame. Use the daily time frame or the 4 hours time frame to draw your support and resistance. Okay, so that is it. You must take note of that. So this is on the daily time frame. We have drawn about 3 different support and resistance. Okay, so let's take note. I'm going to switch to the 4 hour time frame. Okay, Now you could see that this support and resistance we draw are now seen at a very far away from when we switch to the 4-hour time frame. You can see that they are far away from the chart. Okay, so when we come to the 4-hour time frame, we can draw another support and resistance, okay, within the 4-hour time frame. So down here we can draw this, we can put a line here, look at where the price touches and then it reverses. Okay, so at this point you could see that we can draw a support here. You see that whenever price comes close to these areas, it reverses backwards. Okay, so it went up, it touches the support, it went up, touches support, go up, consolidate for some time, come back to touch the support, go up, come back to touch support. Okay, so where price touches several times and move in a certain direction is what we call the support. Okay, what we call the support. So kindly take note. Then okay, so and then up here too we can draw a resistance. Okay, so you just draw a line, you put a line here where price touches and then it reverses backwards. Okay, so this is also acting as a resistance. So what you do is that when price gets to the support, you know that whenever price gets to the support, it will reverse backwards. It will react backwards. So the moment price gets to the support, after analyzing your market and drawing support and resistance levels, hello, kindly give me a second. Give me a second. Let me give me a second. I can say me Zoom meeting with my friend. I'm on 5 minutes. Okay. But yeah, me and my friend. All right. So thank you so much. So I'm saying that whenever price gets to the support, it bounces back. Okay. So you wait till price get to the support, then you buy. When you buy, you look out for when price hits a resistance, then you sell. Okay, so for example, you bought at this zone, you bought at this zone, okay, then price went up to this level. Price went up to this level, then you sell, because you know that it's getting close to a resistance. Once it hits the resistance, it will reverse back down. So you buy from this zone, then you sell. Or when you see that it gets close to the resistance or it hits the resistance, then you buy here and then you sell at the resistance. Then when you get to the resistance, you can also sell from this point, then it comes back to the support, then you leave the market. Then you can buy from here. So you can be buying and selling depending on where price go to. Okay, and you could see that whenever price breaks a resistance, okay, you could see that this line is acting as a resistance. But when price touched it several times and it came back, you could see that it break out from here. Okay, this side, you see that price has broken the resistance line. Now, whenever price breaks a resistance line, that resistance line now tends to be a support line. Okay, so you could see that when price break the resistance line from here, it went up and then it came back to test the support. This is now acting as a support because price has broken it. So it's now a weak resistance. It will now come to act as a support. So after price has broken this resistance, it goes up and then it comes back to test the support again and goes up and come back close to the support and then goes up in that order. Now you can see that this market is moving in an uptrend. Okay, so our resistance here has now turned into a support line. So take note that whenever price breaks a resistance line, it now tends to be a support, because as it goes up, there will be a pullback which would come and test that support. Okay, so you wait until the moment you realize that price has broken a resistance line, you realize that the market has changed direction. It will no longer now respect that line as a support. As a resistance. It will now support retest it as a support. So it goes up and then it comes to retest and then moves up. Okay, so take note. When you draw your support and resistance, whenever price breaks the resistance, that resistance now acts as a support. Okay, so that is it for that is it. So you can see that we have a number of support and resistance on the chart. I'm saying that always use the 4-hour time frame to draw your support and resistance. Okay, that is where price got to and it reversed. You put a line there to show that is a resistance, and then as it comes down, where it touches and then it reverses backward, that will serve as your support. So whenever price gets to the support, it will respect it and then it bounce back. When it gets to the support, it will respect it and then bounce back. And then when it breaks a resistance, now the resistance now tends to act as a support. Okay, so kindly take note of that. Okay, so I draw this in the condensed form. You could see that when you have the open chart, you can have a series of support and resistance. Okay, so look here, I'm going to draw support and resistance lines here. This would be a support. Okay, then we'll have a resistance. We'll have a resistance up here, because as the market goes up, it reaches this point and then there will be a pullback here. So where the pullback occurs will be your resistance. Now you could see that this would also our immediate resistance will be here. Okay, because when price got to this point, it reversed. Let me draw a resistance here. Okay, you could see that when price went up to this point, it reversed downwards. Okay, price went to this point and reversed downwards. Now this is acting as a resistance. Okay, so once price breaks the resistance, it forms a new high. That new high becomes a resistance, and then it comes back to test this resistance, which is now acting as a support. Okay, because price has broken this resistance will now act as a support. So you realize that as price goes up, it comes back to touch the support here and then it goes up again. Okay, now this resistance has been broken, so it will now act as a support. So it goes up and then it retraces, and you can see that it comes to test the support before it goes up again. So whenever price breaks a resistance, that resistance acts as a support. So this is how to trade support and resistance. You wait till price break the resistance, okay, and then forms a new high. Now that new high will be where price retraced, where price got to, and then it retraced backwards. Then you put a line there which is serving as a resistance. Now because it breaks this previous resistance, it will act as a support. So you wait till after price has retraced, you wait till it comes to test that support. Then you can buy from the support, and then as it goes up, you sell. Okay, so you buy from here, then you sell. You wait for it to come and test the support, then you buy. Then it goes in that manner or in that order. So you keep buying and selling. That is in an uptrend market. As you can see, this market moving up. Okay, this is an uptrend market. So that is how to trade support and resistance in an uptrend market, and then it applies to the same in a downtrend market. Let's go and look out for where we can find a downtrend market on the daily. Let me see the daily time frame. Good. This was let me see. want to see. All right, so that is it for you. Use the same concept to trade the downtrend. Okay, you draw your support and resistance lines. As it touches the resistance, you know price will reverse, so you can sell from there. As it touches the support, you buy in that manner. Okay, then let's look at how to draw. These ones are called horizontal support and resistance. What we have talked about are horizontal support and resistance. Now you can also have what we call trend line. Okay, trend line. Now you realize that the market is moving in what? It moves in a trend. Okay, in a trend. So the first line we drew, let me delete these lines. Let me delete them. All right, so we have something we call trend lines. Okay, we use trend lines to locate the trend. So you could see that we identify this price movement as an uptrend. So you draw a line which will touch at least 2 points of the price. Okay, so at least 2 points. So you draw a line from down here up. You make sure it touches at least 2 lines. Okay, so this is a trend line. In an uptrend market, this is how a trend line will look like. So you realize that whenever price gets to the trend line, it reverses upwards. Okay, so price touched the line here where you drew the line from. It went up and then it comes to touch the line, then it goes up. It touches the line, goes up, touches the line, goes up. So this is a trend line. Now this one is acting as a what? As a support. Okay, whenever price gets to the support, it goes up. Get to the support, it goes up. So we can use trend lines, which would also act as what? Support. And then we can have a trend line which will also act as a resistance. So in this case, we can draw a line from here upwards. Let me draw it well. Let me draw it well. Okay, so this will become a resistance for us. So you could see that when price gets to the resistance, this line, it comes down, gets here, comes down, gets here, comes down, in that order. So we can have trend lines that act as what? Support and resistance. And whenever you are drawing these lines, it should touch at least 2 lower points. That is when you are drawing the support. And when you are drawing resistance trend lines too, you make sure it touches at least 2. And the more touches on the line, the perfect your trend line becomes. So make sure when you are drawing these lines, it touches at least 2 points on the line. 2 or more points on the line. So kindly take note of that. Okay, then let's go back to our key takeaways. We have support. It says support occurs where a downtrend is expected to pause due to concentration of demand. So concentration of demand, you realize that where price paused due to concentration of demand. Now price went up and come here. There were demand here, buyers at this point. So buyers will buy and then move the price up. Then it comes back to this line again. This is where demand is, because there are buyers here. Buyers will buy and move the price up in that order. Okay, that is one of the key takeaway as well. Then we have resistance occurs where an uptrend is expected to pause temporarily due to a concentration of supply. So as the price is going up, okay, as the price is going up, as the price is going up, let me use this one for illustration. Okay, so as the price is going up, for example, let me draw a resistance line here. You make sure it touches at least 2 points. Let me move it up. Okay, so you could realize that it touches here, it touches here, it touches here as well. Okay, so this becomes a resistance. So whenever price gets to this area, this resistance area, there are what? Sellers here, which are supply. They are called supply zone. Okay, there are sellers here. The moment price gets here, sellers will come in and sell and move the price downwards. So that is what I mean. That is what I mean by resistance occurs where in an uptrend. Resistance occurs where an uptrend is expected to pause temporarily due to a concentration of what supply. Then we also have market psychology plays a major role as traders and investors. Investors remember the past and react to changing conditions in anticipate for future market movement. So it means that these areas that we are calling support and resistance, market psychology says that traders get to identify these areas where price hits and then returns, okay, and they tend to trade based on what these conditions. They anticipate that in the future when price come to reach these zones, they will what react or return, or there will be a pull back. Okay, so that is one of the key takeaways. And we can also say that support and resistance areas can be identified on charts using trend lines. And I'll not talk about moving averages because it will be a different thing. Okay, so support and resistance areas can be identified on charts using trend lines. So that is what I showed you, using trend lines. They can be identified on the chart using trend lines. So a typical example is this. We said this is a trend line, okay? This is an uptrend, so we draw a trend line to touch the base or the support. So whenever price reaches to these areas, they reverse, okay? Then let's look at this is also, you could see that from here the market was in an uptrend. Okay, let's look at this. The market was in a downtrend from this point, so we can draw a trend line. In a downtrend, we can draw a trend line, and we are saying that it should touch at least two areas on the chart. Okay, so this is a trend line, an example of a trend line. So you can see that whenever the price gets closer to the trend line, it reverses downwards. Okay, now here you can see that the trend line was broken here. The moment the trend line is broken, it means that the market is trying to take a different direction. So when price break over the trend line here, you can see that it went up a little and it came to test this trend line, which is now serving as a what? Here it was serving as a resistance, because whenever price gets close to the resistance, it reverses downwards. But the moment it broke this resistance, you could see that it came to touch the resistance, which is now acting as a support, and then move upwards. Okay, so that is what we have talked about so far. And then so that is a key takeaways. Okay, support and resistance areas can be identified on chart using trend lines, like I have said. So it is not all the time that we use the horizontal lines to act as support and resistance. We can use trend lines. Trend line, you look at whether the market is in an uptrend or a downtrend, and you draw lines to touch the tip where price go to and it's reversed, and that will act as a resistance. And when it is below it, it is acting as a support. So I can even draw a support here. You can see that there is a support trend line here. This is a trend line. My mouse is not giving me. So you could see that this is a support line. Okay, you could see that whenever price touches the support, it goes up. It touches the support, it goes up. Touches the support, goes up. Touches the support, goes up. So this trend line, downtrend line, can act as what? Support, and then the up one can act as resistance. So you could see that price is trapped between these lines, going up and down, up and down, up and down, and then you'll be trading. As it goes up, you sell. As it comes to the support, you buy. Okay, so that is how we can draw support and resistance lines. So what I want you to do is that I'll give you an assignment I'll give you an assignment, God willing, tomorrow. You would open a chart. I'll give you a chart to open. You open and then you try to draw support and resistance lines on the chart for me. Okay, so I can draw one here because when price got to this level, it retraced backwards. This is where the market changes direction downwards. Then when the price got here, it reversed. So I can put a line here which is serving as a support. So as it goes up, you see, when price broke this support, okay, when price break this support, it came back here, which is forming a new support here. Then once it has broken this support will now act as a resistance. So you could see that as price break this support and came back, it went up to touch it again and reversed downwards. Now it is acting as a resistance. So take note of that. It's very important. When price break a support line, it will come down and go back again to test that line as a resistance. Okay, so kindly take note of that. Let's look at a typical example. Is here, this part. This is our support line. Okay, let me take away this trend line. This was our support line. Now you realize that when price break this this is our resistance line. When price break this resistance line, the price went up. Let me show it clearly to you. The price went up after breaking the resistance line. It went up and then there was a pullback down here. Let me draw it well for you. Price moved from down here and it break the resistance and went up to this level. Okay, let me make it clear for you to see. So price moved from down here up to this level, and there was a pullback which came back to test this resistance, which is now serving as a support because it has been broken. So as it came down, let me draw it for you to see. It came down to this level to touch this line, which is serving as a support this time round. The moment it touches the support, it went up again. Okay, so whenever price break a resistance, you wait for a pullback to the support again before you buy. When price breaks a resistance, you wait for the price to go up, and then there will be a pullback to the support again before you can buy or you can enter the market. So that is a strategy to trade support and resistance. Okay, then let me demonstrate this last one. Let me see where I can draw a support, a resistance. Okay, good. So you could see from here that whenever price came to this zone, it reverses. Let me draw it well for you to see. Whenever price came to this zone, you could see that it came here and then it reversed down, touch the zone line again, it reverses down, came down, came back to touch it. It touches it several times. So you could see that this is a resistance. Okay, so as price come down and it gets close to the resistance, you could see that you will definitely know that the price will react. So you can sell. Okay, you can sell. A typical example is here. I can draw a support here because you could see that whenever price came to touch this area, it reverses. Okay, let me draw a support line here. You could see that whenever price came to touch this line, this area, it reverses up, came to touch here, it reverses up, came back to touch here, it went up, came back to touch here, it went up again. Now the moment it breaks the support, it means that it's going to act as a resistance. Now you realize that price break it from here, so it means that it has touched it several times. So it has break it and then went up again and came back, touches it, comes down, touches it, comes down before it finally break this resistance line and then went up. Okay, so kindly take note of how to draw your support and resistance on the chart. This is one of the areas. This is what we actually use to trade. and this is one of the most one of the technical analysis tools that we use in trading. Okay, so at this stage I will end here, and then I'll wait for your questions and then answers. I'll wait for your questions and then answers. I'm waiting for your questions and answers. Can we have your questions and answers? Hello. Hello. Can you hear me?
Yes.
Okay, so I'm giving time for questions and answers. Ask your questions. Because we are don't worry if you didn't understand anything. When we start trading, we shall learn this more. We shall learn it more and more and more, because there's not a final study for support and resistance, but I was introducing the idea of support and resistance to you. So whenever we are trading, we will be learning and practicing more, so you get to know them more. But for now, if you have any question, you can ask. Yes, because we are recording the meeting, I want it to be as short as possible. So ask your questions, and then let's try to find answers to them. I'm waiting for your questions, please.
Yes, hello.
Hello, I can hear you.
Yes, with this, I mean, we are learning now. Do we use the trading view for it, or what do you use?
You are asking?
Like the patterns we are learning about, you are drawing for us, showing us.
The
Where
chart.
do we get the chart? Do we get it from trading view, or what?
Yes. So we get the chart from this is it. I'm using trading view. Okay, let me share the screen again. I'm using trading view. So when you go, I think that is a different lesson on its own. That is, if you are new to trading view, let me see if I can. Okay, so let me go to trading view. So this is you can see from here www.tradingview.com, and that is where you actually see all the currency pairs and commodities and whatever you want to trade. Okay, so when you go to www.tradingview.com, you'll see all of these there. Okay, I'll try since we have treated this today, I'll try as much as possible and then do a video about trading view, how to navigate, go through trading view. If you want to change the currency pairs, you change it from here. Okay, so this is GBP, JPY. I can search for USD, JPY. Okay, JPY, USD, JPY. That is US dollar, and then the Japanese yen. You can search every currency here, cryptos, bonds, indices, and a whole lot. Okay, stocks. They are all found on trading view. So what I'm using is trading view. So that would be the next thing I'll speak about. From tomorrow, I'll show you how to use trading view to analyze the market. I believe I've answered your question.
Yes, thank you.
Okay, thank you so much. Let's give room for 2 other questions, and then we close for today. And I want to encourage everyone that as we have started going like this, you need to follow clearly, keenly. You need not to come today, then tomorrow you don't come. If you really want to gain this skill, then you need to be consistent. You need to join us as and when we are learning, okay? Because as we move on, we are not coming back. And these little ideas is what we are putting together so that we can have a complete confidence when we go into the market. And very soon we shall approach there where we'll be able to open the market. We'll set our we'll create a broker account, and then we start trading, okay? But these are the basic knowledge that we'll need before we get there. So I'll urge all of us to be consistent. I think we have done so much. I'm still waiting for 2 other questions, and then we'll close for today.
Okay, I'd like to ask one question again.
Please, you said you want to ask.
Yeah, for example, what you are teaching us now is for currency.
You said it's for
The same, I mean, it's for the currency what you are teaching us now.
yeah. This
So,
is a currency.
for example, is it the same chart or the same candlestick, the same movement they use for the crypto as well?
Yes, this is the same. Okay, that's a very good question. If you are able to grab this concept, you use this to trade any financial market, whether being it crypto, stocks, whether being it for currency pairs. You use the same analysis, okay? So when you get this concept, you can use this to trade cryptos. You can use it to trade every financial market. That is why we are saying this is a professional skill. When the moment you get the concept, you have a lifetime skill. You can use this to analyze any market at all. So it's not only for currency pairs, it's for cryptos, it's for stocks and everything.
The same reading, the chart
Yes,
reading.
yes, the same reading, the same how to analyze the market. That's the same analysis you'll be making.
Thank you very much.
Okay, you are welcome. We have one extra question. Any other question, then we can close for today. Any other question, then we close for today. So as you can see, I'm drawing support and resistance. This is a support because price touches here several times and it went up. It touches here, goes up, touches here, goes up, came back close and then went up. But you realize that when you get to this point, when it comes here, it comes down, touches here, comes down. So this is a support and this is a resistance. Okay. Then you realize that at this stage, price break the resistance from here. It break the resistance from here. So as it goes up, there will be a pullback. Now, because this resistance is broken, it's now acting as a support. So as price goes up, it comes back to test that support, then it goes back again. Okay. And the moment where it got to and then it reversed is now forming a new resistance. So I can put another line here. Okay, this becomes a resistance. So you realize that as price came to the support and went up again, it touched the resistance and it came down. And now it's going back to what touched the resistance and it's coming down. So that is how price move. It moved between support and resistance line. And we are able to get this line drawn carefully. You can make a lot of profit from the market. Okay, you can make a lot of profit from the market. So I would want to stop here and close for today being the 4th day. The meeting has been recorded. I'll share the link on the platform when we are done. Whenever you want to make reference, you can go and watch the videos back. And I hope to see you tomorrow. Your consistency is key, so please let's kindly take note of that as we move on. I'm sharing this knowledge for free. The only thing I need from you is your commitment to learn, and that is all. All right, so if there is no other question, I'll close for today, and then we shall meet, God willing, tomorrow. If you have extra questions too, you can just post them on the WhatsApp platform, and then we'll try to deliberate about it. Enjoy your time and have a good night. I'll see you tomorrow.
Yeah.